Negative correlation, of course. So when we see the orange line underperforming the blue line, and the blue line's diverging at higher prices, that's when a sell comes in on gold, of course. There it is, right there. So there's your sell on gold. So whether you see the divergence or not, at least you're seeing the diverging. Whether you see the divergence between the two lines, you can still see the divergence in the price. So obviously when the price comes up to retest up here, you can see quite clearly there is a monstrous divergence still visible on this screen, allowing you to work back into the short trades again in these early afternoon opportunities for that very, very, very big sell-off. Into the lower price, you can start seeing that we see the orange line starting to outperform the blue line quite easily into those lower prices, and the volume snapping gives you a few ideas that there's probably a bottom edge in here. Market's about to turn back into a buy side. And obviously that buy side opportunity just gave you a little pop there, and we got a nice little buy reversal away from that area. So this has been the caveat that I've had about the gold markets. And one of the things that you saw in this candle here, if you zoom in on this candle here, you'll obviously be able to recognize that we finally got an uptick into higher prices. We got an uptick into higher prices. So that should be an easy sell for us to take advantage of. And it was an easy sell. It wasn't the biggest profitable sell, but it was an easy sell. And then when we started to see this coming back in, of course, we started to say, wait a second, that's all wrong. That's all wrong. It's time to come off the trade. And just recognizing that, guys, meant that we took a 4.5 to a 0, a 3-0. We made $150. We made $150. We're able to walk away from the trade, and we're able to let the squeeze take place, potentially even buy in for the squeeze. Now, it's always good to buy in for these squeezes. When you're doing your Darth Vader impersonation, top lines or bottom lines, and then the value suddenly changes as it did here, that lower low suggests that you should be trading above the top edge. Well, that's a reasonable trade. So obviously, if you were thinking about trading those types of ideas, these are some of the best trades you can trade, because it would have meant you would have been buying against the weak sellers. Now, what side you trade on is your choice, but why not trade both? Why not trade both? Now, some people might say, because you told us to always take away one side of the trade. Well, we're kind of doing that anyway. We took away the buy side here and gave us a sell. We took away the sell side here and gave us a buy trade. But obviously, if you're waiting for the big macro divergence, the only trade you could have really have done in this trade so far has really been to buy into the squeeze higher and then wait for the divergence. You can see the divergence starting to show up again. So we'd obviously appreciate a new retest into 76 to give us a little bit of a chance here. That would be good. And we can maybe take advantage of a retest above 76s for another swing at this. And it's actually very important that you see these, because when you start recognizing some of the values, you can see obviously that from this point onwards on gold, for example, you can see from that point onwards, there was nothing else to the upside, right? So you're obviously thinking about that trade there, and you're thinking to yourself, right, I'm going to be buying lower lows right through this period. Of course you are. And that's exactly what you start looking for. The first buy trade at lower lows made money. The second buy trade at lower lows made money. So what's the trouble? What's the trouble? So it's up to you how you play it. You can either play it as a scalper, which means picking both sides, or you can trade it as a swing trader by picking one side against a macro narrative. Now, the macro narrative is whatever the macro tells you to be doing. The macro narrative on this one here is obviously to be long gold, right? So the macro narrative during that period was obviously long gold. And then at higher prices, we can tell that the macro narrative is to be short gold. And then from this point here, the macro narrative is very definitely to be back on a long gold trade. And that long gold trade is still kind of evolving into this current phase here. Now, it looks actually quite interesting for a sell, doesn't it? So I'll be certainly on offer watch, guys, on this gold at the moment, see if we can pick up any cheeky little buyers that are getting themselves in the wrong trade at the wrong price. buy book at the moment, so just watching to see if any buyers get themselves a little bit upside down, back to front, a little bit confused about what's going on, and then we'll smash them to smithereens, won't we? Smash them to smithereens. Still a buyer book there. Delta's tried to sell it and got jammed, which is interesting. At least some sellers are coming in, but they got jammed on that occasion. So buyers still playing the market bullish, so I'm happy to wait. Let it go a little bit further still. See if we can get a big streaker coming into these trades. When you get a lot of sellers coming in here and they're not making any money, you're obviously expecting that streaking move higher on gold as you normally get, as you've probably recognized yourself several times. When you get a sell at lower prices or a buy at higher prices and it doesn't move higher, there's always that idea of a big fast money move, isn't there? So that's what we sometimes see when this is happening. So we've had a couple of sell attempts from traders on the last leg higher. There's the streaker coming in as we expected, and that makes life easy for us. And we'll just watch for some offers. So you can see what happened. It's exactly the same story on gold every day. I mean, it's dead obvious. So this buy trade, what happened in here was that we started to see some sellers coming in at higher prices and higher prices, and neither of them achieved anything. Neither of them achieved anything. So what happens in that type of situation is we start watching for the streaker coming out, and we start getting ready for the streaker to play. And then obviously the takeaway from that trade is pretty obvious. There's going to be a possible sell, but again, not the most obvious sell coming into the shapes here. And obviously we're very, very close to day high just now, so you're obviously aware of that as well, guys. Day high on gold, so lots of stops up here, lots of liquidity up here, lots of information up here, and still not really seeing a sellable storyline coming in on the macro scale. You think about the macro scale here. When you look at the price of metals and you look at the price of metals there, then of course that would suggest that in terms of where gold should be trading, it should be trading up here, shouldn't it? So I don't want to be too aggressive into the sell. I just want to play it when I see it. When I start seeing a nice ice order, then I start seeing some bears coming in behind on the book, which we still haven't seen, by the way. We're starting to see lots of icebergs, but no bearish reversals just yet. Then, of course, we can take a play on that short gold. Still think it's a little bit cheeky. I think we're still a little bit light of real money value, and we'll probably have to just have to be patient, wait for this to develop, see what happens. But that was brutal. Look at the amount of volume that came in there, guys. The last delta got annihilated on that trade. So you might have taken the sell off that 78 half, my mistake. 78 half, traded 78s, 77 nines, 8 evens traded, and 7 8s traded. 8 evens again. Might have fancied a bit of business there, guys. Might have fancied it.